Hi, I'm Bobby Suman and welcome to the Paytech Show. In today's episode, we're going to be talking about digital wallets. It's no doubt become an emerging talking point in our industry, and we're here to discuss the exciting use cases of digital wallet functionality, the increased customer engagement it can enable, and the role of payment tokenization in unlocking the future of payments. So lots to cover, but thankfully we have three very special guests from the industry with us to break this one down. First, we flew out to Helsinki to speak with Jukka Yliuntinen, Global Head of Digital Solutions at G&D, a leading global company who offers security technologies in both the physical and the digital world that billions of people benefit from every day. Next, we have Shachar Bialick, CEO and founder of Curve, the organisation who look to simplify the way people spend, save, and see their money as industry leaders in performance and quality. And last but not least, we have Andrew Mitchell, Vice President for Development and Infrastructure Support at JCB, the only international credit card brand based in Asia who have over 60 million card members and 12 million merchants across the world. Let's get right into the action. Can you take us and our audience through the evolution of the digital wallet? How did it start and what problems did it initially solve?
It's first defining what is the wallet. Many people think wallet being different things, but most commonly it's probably nowadays some sort of an app that you run on your mobile phone and you can do some financial services. I think that it all started roughly 15 years ago when some of the first implementations were done. For example, mobile money initiatives. There was M-Pesas, there are in Kenya, GCash in Philippines, and they are still actually there. But then also new technologies like near-field communication came, enabling payment, transit ticketing. There was a lot of trials at that time. MNOs were collaborating or trying to collaborate. And then it has further evolved, so 2014 or so, Apple came with their Apple Pay, then Samsung Pay, Google Pay, and so forth. But on top of that, there are many other wallets nowadays. If you look at this kind of the P2P payment, so there is a Venmo in US, which is a PayPal basically. You have Bizum in Spain, which is a big P2P and the payment application. Almost kind of people relate that it's equal to payment when you say, I Bizum you something. So it's a long way, but I would say nowadays really people usually understand that there is some sort of app that you run on your iOS or Android device which can do minimum payment, but usually a lot more other financial services too.
And how have they changed over the last 2 years, would you say? And maybe the most significant change in your eyes?
Well, the last 2 years, I think there has been a lot of, I would say, the positioning, so that who should be this wallet issuer or would like to be, because there are many already. And of course, banks, I've seen that they have very consciously now looked at, okay, if they are not very active in this space, so then they might lose some of their businesses and at least relevance to their customers, because wallet, you could say, especially the financial services wallet, that's how we usually actually spend our financial or use our financial services. I mean, if you want to pay, well, if it's for payment like Apple Pay, you use that, or you could use a bank app for that one. But if you don't have this payment and other services around your app, like a bank, for example, then it's a question that, okay, how do I actually reach to my customers? Is it only for my loans and mortgages that I can offer, which is, I don't know how often you do that one, rather than payment, which is an everyday transaction and opportunity to interact with your customer. So I think that's the big momentum now, and interesting to see what really happens there. And of course, one of the key things, I mean, the last 2 years is that everything has become more digital because of the pandemic.
All right, let's get into this. Can you tell us what unified commerce means?
Unified commerce. That's I guess a fairly new topic, and I think the real definition of that is beginning to develop. But for us, I would say that we interpret that to be the movement of integrating and centralizing the platforms that link together omni-channel payment methodologies. So whereas we would typically see cards being used at retailers for e-commerce, for face-to-face transactions, and for in-app transactions, e-commerce transactions, that traditional linkage has already been there and already defined under omnichannel. But what we see now is that the development and the linkages of how those modalities interact is beginning to change.
We are seeing digital wallets becoming increasingly prevalent with time. What role will these play in a unified commerce landscape?
Well, I think they're extensions of payment methods. I think there's obviously a greater plurality of wallets, and some of those are linked back to the traditional sort of card-based payment methods. But for us, it's probably the flexibility of the product, and everybody's moving towards a digital age, and we have to be inclusive, obviously, to ensure that everybody's able to pay in the way that they want. But certainly, I think younger consumers are more savvy when it comes to using wallets, and particularly for us. We've supported, the different, let's say, M-Pay methods, Apple Pay, for example. And these wallets, because they're being used on a digital device, they're definitely more able to be flexible in terms of adapting new products, new sub-products, new loyalty programs into them. So, even if you look at Apple Pay, again, as the example, it's a fairly smooth and easy integration for a retailer to be able to extend from accepting simple cards to accepting Apple Pay. And if we take Apple Pay Principal, for example, this is an API based method where a retailer can implement Apple Pay using their API. Well, actually, you can look at future wallet products and say, okay, even if you have a singular wallet, that wallet can API connect into different loyalty programs. So I think as long as the wallet providers are very open to working with retailers that have these loyalty programs and drive this demand for consumer loyalty, the product by nature in itself is a much more flexible, dexterous product.
So there's been tremendous investments from some of the biggest financial organisations to sit top of wallet. And I think Curve, both physically and electronically, you sit top of wallet. What does that mean for you?
So from a data perspective, top of wallet, that's more technical of what it means in day-to-day of Curve, is that we're able to see almost the entire financial lives of the customer, how they spend their money, what type of products they receive from other financial organizations, their income levels, and majority of their spend or financial actions are happening through Curve. That's technically what it means, and it's very simple to conclude that Curve is indeed top of wallet because we have an unfair advantage with the mere positioning of the product, the value proposition of all your cards in one. By definition, you will put all your cards in one and you will consolidate most of your transactions, or spend, or financial activities through the platform. Because we give you a lot of the benefits when you do that, from go back in time to better insights, lower FX, more rewards, and so on and so forth. But if you take it to more of the theoretical level, what top of wallet means, what does all this money that's flowing into those companies trying to become the super app? In our view, it is the definition of a company that is closest to the customer, that owns the customer. Nothing can come between this company to the customer. If we take Curve as an example, we don't mind if you use any of the challenger banks or any bank in the world. They're all doing a great job keeping your money safe, in my view, unless you're in a third world country and the bank is really have an issue there. Then as long as you bring everything together into Curve, there's nothing that can stand between Curve and the customer. Even if you get a challenger bank card, you can load it into Curve and still Curve become the only instrument you're using. I think that's what you would say as top of wallet. You are closest to the customer, owning the customer. Amazon is top of wallet or top of commerce, if you like. They're owning the customer. Netflix, for the majority of our generation, I think, is that top of screen. There's nothing standing between you and the customer. They own the customer, they have the data, and the best position to personalize the content and deliver content for you. Spotify is another example for that. So the definition of top of wallet, in our view, is you're closer to the customer, own the customer, you have maximum access to data, not just any access, read and write access, because the job is not to tell the customer what to do, it's to advise the customer what to do, ask the customer what he wants to do, and then do that for them. That's really important, and you have to have the right access for that. And I think a key ingredient in succeeding that is ensuring that there's limited change in customer behavior or infrastructural changes. Infrastructural changes, an example of contactless, or they work with Apple Pay. Apple Pay is a great product if you can use it. Not everyone accepts contactless outside the UK, for example, or London even. For example, customers' behavior is to use cards, especially for large payments. So you have to bridge this new world, new promise of a world to the old behaviors that we have. So whatever solution that gets you to this type of wallet has to have a strong wedge, which means reduction of requirement for trust displacement and reduction of behavioral or infrastructural change.
Have you had almost positive reactions from banks becoming almost a utility of the service?
So when we first started with Curve, there was a huge noise in the market from incumbents. What exactly is the product going to do? Will they disintermediate us? Because we're standing suddenly between Santander and the customer, there's Curve in the middle. But the approach we've taken with the product principles of Curve is that we're not here to disintermediate or displace the banks. We actually believe that banks are doing a great job. Now, I'm a fintech founder. How can it be that you say that banks are doing a great job? If they do, why you exist even? Obviously they don't, right? But that's where it comes to the question of what do you define the job of the bank? And we define the job of the bank as very functional. You open the regulation, and the job of the bank is the long arm of the regulator to multiply money to the economy. Hence, from a customer perspective, is to keep your money safe. And I think we'll all agree that our banks are doing a great job keeping our money safe. Our bank doesn't meet our expectations around customer experience, pricing, and usability of the app, offering, and so forth. But is this fair expectation from the bank? It's not their job. It's not their DNA. It's a myth. This is exactly where Curve comes into play and says, keep your money where it is, and it will supercharge the experience, will supercharge the activity that you would expect from a bank, will provide you that, and do with the bank what they're actually supposed to do. And because of this principle, the outcome was that we must transfer as much information as possible to the underlying bank. So for example, prepaid products that requires you to load money in advance to be able to use the products, utilitarian products, are not sending any information to the underlying bank. They literally disintermediate the relationship with the bank. The bank, Santander, would see £500 leaving the account to e.g. Revolut. They have no idea what they're doing with it. With Curve, because we took the model of loading just the amount, just in time, we are able to send information in real time to the underlying bank. So when I use my Santander card with Curve in a Starbucks, Santander knows I just bought coffee at Starbucks. They have the full stream of information. And that principle was very, very, very important to our success, because bank realized that actually we're not here to displace them and compete with them on the same side of the pie, but rather increase the size of the pie and help them understand better of their customers and originate and target and originate new customers. We're not here to displace them, but create a layer that gets more value to our customers.
What is the European Commission looking to do when it comes to combining digital identity into the digital wallet?
Well, the European Commission has now introduced last summer, I guess it was June, a proposal for the directive that there would be the electronic identity wallets issued by the member countries, which means that then every member country is obligated to do this one. There could be more than one per country, and it's still also to be seen that which are the, let's say, organization issuing this. Is it the government? Is it the bank coalition of banks or other companies? But what does it mean is that there is basically then for every European citizen an identity wallet available, also for the businesses, not just for the consumer customers or citizens. And then that this is also very high assurance digital identity, so that it's basically applicable to any services, also that it's legally, let's say, obligated to accept that type of wallet. And maybe for one more thing there is that if we look from the banking sector or financial services sector, the important is that even if you don't issue such identity wallet as a bank, you need to accept one. So for your services, this needs to be one way of using the identity and, for example, authenticating yourself as a consumer customer.
And I know we've touched on it already, but what can having a digital ID ecosystem mean for the EU going forward?
Well, the identity wallet is, of course, that you hold your identity there, so identity credentials, and then it's become. Let's see what and how this will be implemented, because your identity could be just this a sequence of numbers which relates to you, but there could be other attributes to that one. For example, your age or your address and different kind of data elements. And for example, for the age verification, they don't need to know that it's Jukka who lives in certain country, but they only need to know maybe that I'm 18 and I'm allowed to, I don't know, gamble or something. So now that's one part. The other part is that there could be also some other data related to that wallet. So documents and so forth, which you could share that you can access different services.
How is this intertwining with helping the COVID pandemic too?
To the pandemic, I believe myself that we don't solve too much anything for the COVID-19 because it takes time before there is any implementation. Regulations take certain time and so forth. But for the future similar situations, I'm sure that there is a big help, because now we all need to basically interact online. So, and online, how to prove that Jukka is Jukka, you need to have some elements for that one. And identity wallet would be, of course, a great way to do that one.
Moving slightly away from digital ID then, what are some of the other future use cases that banks are looking to embed into digital wallet functionality?
Well, everybody is looking to have kind of everything, but I believe the payment is a must first of all, because that's, in my opinion, because that's this daily interaction. If you don't have that one, you don't have an appeal for the consumer or any customer. The other one is easy, other financial services, so that you can provide whatever bank has on their portfolio, maybe going even to the insurance and so forth, like many companies do. There are, for example, some of our customers who are insurance companies, nothing to do with the banking and payment, but now they want to provide the payment because it kind of nicely then again or engage with the customers. On top of that, then this digital identity for sure is a big topic, but it's also a very complex topic because who would you trust as an identity provider? And if there are many identity providers, for example, within the country, I mean, for example, digital identity wallet issues, who do I want to use? Only one, two, or more? Or who do I trust as a consumer, as my identity provider? Because I don't want to have probably too many. I get confused. So you have too many apps already, and if there are 3 identity apps, so it doesn't work for me. And I would guess for most people neither. But then what the banks seem to look is, of course, something which is also related to when we buy and purchase something. And then it comes to the loyalty, couponing, these type of things. But again, they are very complicated because it's a very fragmented. Every merchant has their own scheme for loyalty, different backend systems, so there is no standards. But it looks like that there is a value, because that's a very important for us as a consumers, but also merchant, and without merchant there is nothing to pay for, basically. So, but those are the fields I see that the banks definitely want to work, and if you look also the big techs there, it's exactly the same topics on their plate.
I think as well, when you talk about like the everyday payments being provided, the fact that you can pay for parking and pay for petrol, like embed all of those financial like components is so useful for the consumer as well, and buys into that element of trust you were talking about too.
Yes, absolutely, and that then comes that, okay, the payment is what you want to do, or you want to buy something and you need to pay, but then how embedded probably these kind of different use cases are. So that if I want to park my car, I just park my car and walk away, and the payment is actually done so that they, for example, read it by NFC or Bluetooth or whatever, but I don't need to necessarily do anything. Or if I do, maybe it's an in-car payment, it's kind of integrated to my dashboard, and there it says that you arrived this parking lot and it cost you €5 for an hour, and you just click the button and there you go. I think this is exactly then what happens, and which makes kind of the payment experience much more easier and friendly.
Definitely. Why do you think you've been so successful of all of the first wave of the industry's challenger banks? I'm going to close banks off there.
So the reason we got to where we are in short is we had a very clear direction of what we want to do and where we want to be every year over the next 5 to 10 years. And we were able to attract remarkable talents and give them the environment to success. But the second reason is simply put, team. I think one of the greatness at Curve is that we're able to attract remarkable talents. And the reason we're able to attract remarkable talents is because the mission is pretty bold. There's very few companies who were able to achieve the stardom of Spotify, Amazon, Facebook, and Netflix, and the likes. And the opportunity Curve is after is no different. Mm-hmm. It's just we bundle the financial space. We bundle movies, we bundle music, we bundle commerce, we bundle financial space. It's bigger than probably all three of them together. So the mission and the impact that we can deliver is pretty significant. And the impact we try and deliver is to empower people to celebrate life by giving them financial freedom. Mm-hmm. It's something that excites me every morning I'm waking up from my bed.
How will all of these innovations, contribute to increased customer loyalty between customers and their financial organizations?
Well, I believe that it is one of the key factors. So I want to use, for example, my bank services well because I've been customers of them for a long time, for sure. Mm-hmm. But if nowadays I have tens of different options, almost for the same services, and if I would see deteriorated user experience, I would probably start considering shifting my assets to another provider.
I think that comes back to CX. There's a lot of different touch points, particularly for us within the payment chain. We as a payment method, we can't necessarily affect things like stock. But what we can do is touch every part of that kind of middle layer, mm-hmm. The transactional layer. So we can obviously provide payment acceptance in a way that the customer likes to pay, but also provide certain frameworks at the back end of that so that, when we're exchanging transactional data, we make sure that the data is rich. And I think this is something that we as a payment network, have been looking to do for a number of years, is to improve the level of data enrichment that we can provide through to our issuing institutions. And we're working on new methodologies of doing that, new specifications. I definitely don't want to get too geeky about that, but I think, and we also look at the security layer, because the key, I think, to any transactional relationship between a consumer and a merchant is going to be heavily vested on the consumer being able to trust that their data will be kept securely, mm-hmm. And obviously they will get the output from the transaction that they wish in terms of loyalty and benefit and seamlessness. And I think once the customer can experience that positive energy from their relationship with a particular merchant, I think that really meets the customer need. And I think what we really need to look at now is that retailers, probably in this kind of competitive world, where everything is becoming more digitized and more competitive in that element, is that the retailers are always able to exceed that customer need, and that will produce the satisfaction.
Mm-hmm. My last question to ask you is, will payment tokenization also play an increasing role in making shopping more secure?
Yeah, for sure. And I don't know about you personally, Bobby, but certainly in the last couple of years, I've certainly had a few emails from different app providers that I use, particularly the takeaway ones during lockdown, right? Where there have been data breaches. Yeah. So I think we are in always a pitched battle between fraudsters and security providers, and at heart, we may be a payment network, but what we really are is a kind of secure authentication layer. We produce that trust between consumer and retailer, because everything that gets sent in between should be secure. So we work on a number of different ways to really ensure that data can be kept secure. For example, we look at chips and chip cards. These are wonderful pieces of technology, but we cannot assume that they're completely infallible, and the cryptography that underlies that. So actually, we're looking at new ways of encrypting the data, even beyond tokenization, that just relate to the simple cryptographics of how chip data can be kept securely. But tokenization, again, is probably an extension of that concept. And we've been working on a number of things, particularly with EMVCo, the kind of pan-industry, card payment industry body, to work on a new technology which is, given a couple of names, let's call it secure remote commerce. This is a kind of form of broad tokenization. We also have our own proprietary method, card-on-file tokenization. And again, we support these MPay wallets where your card data is kept securely. It's kept behind several firewalls, so at least when you're transacting at the point of sale, you're not actually using your real card number. There's a cryptography layer behind a cryptography layer behind a cryptography layer. So I think for us that's going to be very important because we know fraudsters are getting more sophisticated. Quantum computing is coming, which means the possibility for fraudsters to mine for cryptograms will become much quicker. So therefore, we need to get ahead of the game that way. And definitely keeping everything behind several layers of firewall is probably a wise thing to do in future, and we're definitely on that.
So this is the kind of a technology, but what it allows basically is much more security. For example, the use cases I mentioned, but also this, let's say, easiness to use, because you can present much more metadata with this token. For example, that I just see my card logo, I push that one, and I can, for example, from my let's say bank app, actually launch that same card to, for example, the Google Pay wallet, or I can launch it to, for example, Amazon if I don't have it there. So that makes also the usability for the consumer really great.
We've talked a lot about the exciting opportunities that come with the digital wallet. What would you say are the most important things to get right when it comes to creating the digital wallet, and how will it look in a few years' time?
Well, very good question. So if I would know, I would be probably soon rich man. But of course, like we discussed already earlier, so there is the trust and the security behind. So I believe that you need to have that one, because you can breach it once, but then recovering from that breach is very difficult. So you kind of lose your trust immediately. So that would be my statement also now. And then if you can somehow sugarcoat that with the more good, let's say, relevant services, I think that's also the formula to win.
Well, that's all we've got time for on today's episode of the Paytech Show. I hope you've enjoyed it. You can catch the rest of our episodes and much more at ffnews.com, and of course our YouTube and LinkedIn. Thank you to all of our viewers at home. I've been Bobby Suman, and I'll see you in the next one.